Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this particular video, we're going to be looking at a strategy that traders use when trading with the Heiken Ashi Smoothed indicator. Now, in a previous video, I already introduced the Heiken Ashi Smoothed indicator, and this is the indicator right here. It is a custom indicator which helps traders to identify the direction of the trend, and it also helps traders to find good buying and selling opportunities. All right, the indicator gives you both entry and exit signals. So I already covered the basics of this indicator in a previous video. You might want to check it out. But in this particular video, we're just going to be discussing a strategy. All right, we're going to be focusing on how to use this indicator and also combine it with any other indicator of your choice to form a good trading strategy. All right, now let us just get right into it. So this indicator is a smoothed version of the Heiken Ashi indicator. All right, like I already said, it's a custom made indicator, so it requires you to download it from a reputable source online and then load it on your chart. Okay, so now this indicator identifies sell opportunities or a bearish trend by displaying red candles above the candlesticks. Okay, it displays red bars above the candlesticks, signifying a bearish trend. On the other hand, it displays green bars below the candlesticks, signifying a bullish trend. Okay, so how this indicator works is that when you have a bullish trend, the green bars begin to appear. All right, and then when there is an increase in volatility or an increase in momentum, as we can see here, around here, when there's an increase in bullish momentum, you will notice some distance. All right, when the trend is getting strong, you will notice some distance between the candlesticks and the indicator. We can see it happened here. It happened. Okay, I mistakenly removed the time frame that I was on. I don't remember again. Okay, all right. So it happened around here. Can we see? It happened around here as the momentum was quite strong. There was a gap between the candlesticks and the indicator. All right, then when the candlesticks began to come close to the indicator again, it shows that the momentum had decreased, and we can see that it happened here again. All right, we can see that it happened here again. As the momentum was getting strong, the distance between the candlesticks and the indicator started getting wide apart, and then when the momentum started getting weak, the candle and the indicator began to touch again. All right, and then in the case of a sell trend, you can see that it happened here as momentum was increasing. Can we see? As sell momentum was increasing, can you see that there was some distance between the candlestick and the indicator? Then when the momentum decreased, the candlesticks and the indicator now began to touch again. So for this strategy, in order for you to time your entries and your exits, once the green bar forms, wait for a minimum of 3 bars. All right, when you have 3 bars form, then you enter a buy trade. Set your stop loss below the swing low, and then for your take profit, you can either decide to use the nearest resistance or just wait for red bar to form. Minimum of 3 red bars. The reason for waiting for a minimum of 3 red bars to form is because one red bar could just indicate a slight bearish momentum. It doesn't mean that the trend is going to reverse. For example, in this situation, we can see that we had, where is it again? We can see that we had a red. Can you see this? Can you see this red bar form here? There was just a minor pullback. So if you had exited, you would have missed out on this move. So instead of exiting at the sight of one red bar, wait for 3 red bars to form. That those three red bars will be an additional confirmation that the bearish move is actually valid. So we should have exited this buy. If we had entered a buy around here, we shouldn't have exited here. Instead, we should have exited somewhere around here after three bars had formed. Okay, so that is how to use this indicator to identify good buy opportunities. For a sell opportunity, it is just the reverse. Okay, when you have three red bars form above the candle, you enter a sell, set a stop loss above the swing high, and then for your take profit, just decide to wait for uh three green bars to form. Three green bars to form. However, when you notice that the candles and the indicator are beginning to come closer to each other, it shows that the momentum has decreased. All right, so you should be watching out for what happens next. You don't need to exit immediately. Just watch out for what happens next, whether there's going to be a breakout or whether there's going to be a continuation, because you can see that this indicator actually serves as somehow it serves as a support and resistance zone. All right, because you can see that during this buy trend, you can see that the price was actually bouncing off it, going in the upward direction. But when the indicator and the candlesticks now came close to each other, it shows that there could either be a breakout or a continuation. So when you want to exit, make sure that you wait for confirmation. Do not just exit at the site. I am emphasizing it. Do not just exit at the sight of one red candle, one red bar from the indicator. Okay, make sure you have confirmation, at least three bars, and then you can use other. You can also use other indicators for your confirmation. Now let us just add on the stochastic oscillator. Okay, let us add on a momentum indicator. Okay, you can decide to use RSI or stochastics or MACD or even other trend following indicators. Okay, just to confirm your entries and your exits. So now we can see that in this situation we had a buy signal from the Heiken Ashi Smoothed indicator, and then we can see that the stochastic also gave us a confirmation as it was in oversold territory and pointing upwards. So this would have been a good place to enter a buy trade, setting stop loss below the swing low, and then for our take profit, remember, wait for three bars, red bars to form before you exit. Okay, now we can see that in this situation where we had a single bar form, can you see that the stochastic was even just about to point upwards? So the stochastic was even indicating that that is not a great place to sell, because the stochastic had a crossover. Let's watch. Look at this. Look at this. Right after this formed, look at this. We had a bullish crossover. So even the stochastic was confirming that this is not a great place to exit, because the bullish move is about to continue. All right. So you see the reason why it's good to have confirmation signals, right? So that you can be able to stay longer in a trend, and so that you can be able to confirm, the great place this to enter and exit your trades. In addition to this indicator and even this confirmation indicator, make use of trend lines as well, because trend lines can also give you ideas of possible reversal points and all of that. In this situation now, you can see that we had a breakout from the trend line, and while that breakout happened, we had the red bars being formed by the Heiken Ashi Smoothed indicator. So now this was going to be an extra layer of confirmation, the breakout from the bullish trend line, because this is a bullish trend line, right? So we had a breakout, at the same time we had red bars forming right above the candlestick. So that was a confirmation of this sell. And then at the same time, towards the breakout, we had the stochastic oscillator in the overbought territory and coming downwards. And then while the breakout happened, the stochastic was already trending downwards. So we had another confirmation from the stochastics. All right, so it is good that you get confirmations from other indicators in order to add a layer of confirmation, right? You need to have a layer of confidence. A layer of confidence to your trades, so that you can be confident when executing your trades. And then it's important that you also make use of horizontal support and resistance zones, because this can also give you possible reversal points. All right, it is good when you have a confluence when you are trading, right? Have confluence, have multiple signals telling you one thing. When you have multiple signals telling you to buy or telling you to sell, you will be more confident when you are executing that trade. All right, so that is it basically for this strategy. All right, now this indicator is actually great, okay, for filtering out it's actually great for filtering out fake outs, right? The strategy as a whole, the strategy of making use of trend lines and making use of the Heiken Ashi Smoothed indicator itself, and then a momentum oscillator such as the stochastic, right? Because when you have multiple confirmations, the tendency of you trading fake outs will be lower. Okay, for example, now let us use this as a very good example. Can we see that this situation seemed like a breakout? Compare this to this. Can we see it was similar? We can see that we had a strong bearish candle here. We had a strong bearish candle here. But in this situation, the trend line showed that this is just a pullback. The stochastic oscillator showed that this is just a pullback. So even this horizontal support showed that this is just a pullback. So this strategy will help you to filter fake outs, and it's going to enhance your trading strategy, because if you are using only the Heiken Ashi Smoothed indicator as this bearish candle form, you might think that a bearish reversal has started. You might think that. But when you have the confirmations, it shows you that this is just a pullback. And then the main breakout finally happened here when the trend line confirmed it, the Heiken Ashi Smooth indicator confirmed it, and the stochastic also confirmed it. So you can see how great this strategy is. All right, so I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to drop a comment below if you have any questions, or if you want me to cover any indicator that I haven't covered yet. All right, and then if you have any experience using this strategy, kindly share your experience in the comment section. And in the meantime, thank you for watching, and I hope to see you in the next video. And I wish you a happy trading.